Hi, today I'm going to tell you about stock market today. Markets braced as Israel moves Iran tax response. US equity futures moved higher Monday while oil price slipped and the dollar gave back recent gains against its global peers as investors looked to Israel's formal response to an unprecedented missile attack from Iran over the weekend. The dollar surged to a fresh 5-month high against its global peers Sunday as investors scrambled for safe haven assets and braced for a week of spiking markets volatility amid concern about the prospect of a wider military conflict in the Middle East, triggered by Tehran's attack. Iran said the strike, its first ever military action that directly targeted Israel's sovereign territory, was launched to retaliate for Israel's April 1st attack on a consular building within the Iranian embassy compound in Syria, which it said killed several high-ranking officials among Iran's Islamic Revolutionary Guards. Israel, which has not claimed responsibility for the events in Damascus, has vowed to extract a price from Iran when time is right for us, after saying it repelled around 99% of the 300 drones and missiles Tehran launched late Saturday evening. We will build a regional coalition and exact the price from Iran in the fashion and timing that is right for us, said Benny Gantz, a retired army general serving in the cabinet of Prime Minister Benjamin Netanyahu. Iran, meanwhile, has said it will strike back if either the US or Israel retaliates. The president has been very clear. We don't seek escalated tensions in the region. We don't seek a wider conflict. White House National Security spokesperson John Kirby told ABC's This Week program on Sunday. I think the coming hours and days will tell us a lot. Nonetheless, that prospect, which began with Iran-backed Hamas crossing over from Gaza and killing and capturing 1,200 Israeli citizens on October 7, has the potential to rock global financial markets after the week of surging volatility tied to the repricing of Federal Reserve interest rate cut forecasts. The S&P 500 ended 75 points lower on Friday, marking its biggest single-day decline since late January and a one-week decline of around 1.55%. Investors will also navigate a busy week of corporate earnings, with 41 S&P 500 companies set to report over the next 5 days, as well as key readings on retail sales, housing starts and weekly jobless claims data. Analysts see first quarter earnings rising 2.7% from a year earlier to a share-weighted $447.3 billion, with second quarter profits estimated to improve to $494.7 billion. The Commerce Department will also publish March retail sales data at 8:30 a.m. U.S. Eastern Time, with economists looking for a modest easing from the $700.7 billion tally. Early indications suggest markets are for the moment looking at a solid Monday open, with futures tied to the S&P 500 indicating a 22-point opening bell gain and those tied to the Dow Jones Industrial Average suggesting a 190 points advance. The tech-focused Nasdaq, meanwhile, is priced for a 113-point gain, despite pre-market declines for heavyweights Tesla and Apple. The US dollar index, which tracks the greenback against a basket of 6 major currency peers, was marked 0.15% lower in early trading at 105.876. It had hit the highest since November 2 over the weekend, suggesting investors are setting up for a week of risk aversion as geopolitical tensions continue to simmer. Gold, another safe haven asset, was marked 1.2% higher in Sunday deal and changing hands at 2,371 per ounce. Thank you for watching, subscribe, leave your comments and thumb ups.